Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into company filings and try to make sense of all that corporate jargon. Today we've got a filing from Fortress Net Lease REIT, and let me tell you, it has got some interesting numbers and a look at how they're handling their money. Stick around because we're going to break it down for you. Before we jump into the details, if you are new here, you'll want to hit that subscribe button. We do this kind of analysis regularly to help you understand what is really going on behind the scenes. Oh, and we have a Discord community where we talk about these things and more, so be sure to check that out in the description below. Alright, so we're looking at a report filed on the 6th of February of 2026, covering events up to the 2nd of February of that same year. This document is called a Form 8K, which basically means it is reporting some significant events that have happened outside of their regular quarterly or annual reports. Think of it as a special announcement from the company. The big news here is about something called unregistered sales of equity securities. Now, that sounds complicated, but what it really means is Fortress Net Lease REIT sold some of its own stock, but they did it in a way that doesn't require them to go through the usual. Very rigorous process of registering with the government and letting everyone know every single detail. They're saying they did this using specific exemptions in the law, like Section C and Regulation D. They believe this means they don't need to register the sale of these shares. So, what did they sell and for how much? They issued and sold a total of over 4 million common shares. They brought in about $41.6 million from this. This sale happened on the 2nd of February of 2026, and the price they got for each share was based on the net asset value, which is basically what each share is worth according to the company's own books as of the end of December 2025. Now, let's look at the breakdown of these shares. They sold 1383800 shares of Class S stock, bringing in $14,306,000. They also sold 1708833 shares of Class I stock, which generated $17,687,280. Then there were 344,552 shares of Class F. Stock sold for $3,567,840, and finally 574,733 shares of Class FI stock, which brought in $5,989,000. These are significant amounts of money, and it tells us they're bringing in new capital likely to fund their operations or investments. Moving on, we have other events, and this section details distributions. Distributions are basically how companies that are structured, like real estate investment trusts or REITs, share profits with their shareholders. Think of it like a dividend, but specifically for REITs. On the 30th of January 2026, the company declared these distributions for each class of its common shares. For Class S shares, the gross distribution was $0.0712 per S share, but after shareholder servicing fees of $0.0073 and management fees of $0.0108. The net distribution to shareholders was $0.0531 per S share. For Class I shares, the gross distribution was also $0.0712 per S share. They didn't have a shareholder servicing fee for this class, but there was a management fee of $0.0108, resulting in a net distribution of $0.0604 per S share. The Class F shares had the same gross distribution of $0.0712. Their shareholder servicing fee was $0.0073, and the management fee was $0.0086. Leaving a net distribution of $0.0552 per S share. Then we have Class FI shares with a gross distribution of $0.0712. No shareholder servicing fee here either, but a management fee of $0.0087, and the net distribution came out to $0.0625 per share. There is also Class DS with a gross distribution of $0.0712. Again, no shareholder servicing fee, but a management fee of $0.0089, giving a net distribution of $0.0623 per S share. And finally, Class E shares received the full gross distribution as their net distribution, which was $0.0712 per S share, with no fees deducted. These net distributions are scheduled to be paid out around the 3rd of February of 2026, either in cash or reinvested back into buying more shares for those in their distribution reinvestment plan. This basically means they're returning profits to their investors, which is generally a positive sign, but it's important to see how these fees affect the bottom line for shareholders. Now, let's put on our analyst hats and look at what this tells us. Fortress Net Lease REIT is actively growing, evidenced by the significant capital raised through equity sales. This capital infusion is likely to fuel further expansion or support existing assets. The various classes of shares and differential fees are common in REITs, often catering to different types of investors or distribution channels. However, the presence of management and shareholder servicing fees, while standard, does eat into the gross distributions. For investors, understanding these fees and how they impact net returns is crucial. For example, while Class E shareholders get the full gross distribution, other classes see a portion of that return taken by fees. This doesn't necessarily mean it is bad, as sometimes these fees cover valuable services or are structured to reflect different investment strategies, but it's something to be aware of. Looking at the overall picture, Fortress Net Lease REIT appears to be in a growth phase, actively managing its capital structure by issuing new equity and distributing profits back to shareholders. The key for investors will be to monitor how effectively this new capital is deployed and whether the net distributions continue to be attractive compared to market alternatives, all while keeping an eye on those management and servicing fees. Alright, that is our breakdown of Fortress Net Lease REIT's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think their strategy of raising capital and paying distributions is a winning one? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And make sure you subscribe for more deep dives into corporate finance. And don't forget to join our growing community on Discord. Linked in the description. Thanks for watching, and we'll see you next time.